Good evening, everybody. Welcome to another live stream with me. I'm Charlie. This is Moving Home with Charlie. And this was an unscheduled live stream because I'm still slightly hungover from a wedding I was at last night. But you'll see that the topic of today, it's on the screen already, extremely high negative equity risk for first-time buyers. And I felt that this couldn't wait until tomorrow. So, because my ultimate long-term mission has always been a home for everybody. So included in that mission is to minimize the number of people who lose their homes because of negative equity. And something happened today, which I will explain, which made me realize that if I knew anybody who was a first-time buyer with a mortgage, this advice does not apply to anybody else. If you're a cash buyer, I'm not talking to you or about you. If you're moving house and you've got more equity, I'm not talking about you so much. I'm talking about people with a large loan-to-value mortgage who are about to buy their first home or have just bought, exchanging or thinking of doing it. And my advice to anyone that I know, like a friend or family in that position right now, would be, don't stop right now. Okay, and this is new advice. This is updated advice. My advice was a few days ago, because just a few days ago, I was still saying, if you find a place you like and you can afford it, buy, just don't overpay. So as of today, and until further notice, my advice to first-time buyers with a mortgage is changing from go ahead and buy but don't overpay to stop right now and wait for this turmoil to pass before. And in this video, I'm going to explain my reasons and my thinking. I will share with you the 3 clips I heard today that together led me to this opinion that I had to do a live stream tonight. So I just want to make this clear in case anyone's watching right now and hasn't got time to watch this whole live stream, which will probably going to be about 20 minutes, half an hour. If you are about to exchange, like even if you're exchanging tomorrow, if you're due to exchange tomorrow, Monday, the 3rd of October, suspend it. I'm not saying pull out. I am saying press pause and do not exchange if you are a first-time buyer with a large mortgage. Do not do it tomorrow, okay? Why am I suddenly saying this? Why am I changing my mind? Because for reasons I'm going to come on to explain, I think that the risk of a very sudden and catastrophically deep crash has suddenly materialized. It wasn't there even a few days ago, even though in last week's turmoil. Okay, so let me just recap. My advice going back a couple of months has been that I thought house prices were falling already at the agreed stage. It just wasn't any public evidence of it. And then people said to me, what's your prediction? And my prediction was a gentle fall in house prices towards the end of 2022. And then 2023, slightly steeper falls, and then leveling off in 2024. That was my advice. Now, I now am revising that. I think that we could be, okay, I think that the probabilities of a sudden, much steeper price collapse has increased to what I would call a real danger level, to the point that, again, even if it was someone in my family, friends or family who are about to buy it, I would say, if they say, well, hang on, what if we suspend, we might lose the deal? I'd say that is a lower risk than exchanging right now. And if it was me in that position, so I would definitely be suspending proceeding with exchanging as a first-time buyer with a mortgage. Even if the other side turned around and said, look, if you don't go ahead with the exchange that was due tomorrow, we're going to pull out. I'd say that's your choice. I'm prepared to do it because I'm not prepared as a first-time buyer to exchange with this current turmoil. Now, this is easily the most dramatic and fevered doom-mongering, for those of you think I'm a doom-monger, that I've done so far. So why am I doing it? What has led me to do it? That emergency Bank of England intervention last week into the gilt market was totally out of the blue, very sudden, and I have now seen commentators saying that we were hours from pension funds becoming insolvent. We were hours away from pension funds with billions of private savers' money in people's pensions, were hours from being totally collapsed. We were this close to this, much worse than the 2008 situation last week, just a few days ago, right? And that's been sitting with me for a while. And then today, as any of you have been watching my shows, and by the way, welcome to all new followers, new subscribers, hundreds of you since the last one, so welcome. Oh God, sorry, turn off invites for this live decline. Sorry. Oh, I've lost my place. Yeah, see, people are asking what I thought was going to happen. And I said, well, maybe the government is going to have new leadership, maybe it's not. And that seemed like an outrageous thing to think a few days ago. And I have been predicting turmoil and a slowdown in transactions for at least 3 months until January. That was my most recent prediction. What I'm now predicting is, guys, forgive me, I'm going to hide the chat. Is just taking my. I'll put it back on. You'll see it on YouTube. What has changed? Okay, I'm now going to play you this first clip. I will actually share the screen with you and play you this first clip, which I heard at 8:30 this morning whilst lying in bed feeling very hungover after the wedding. It's just a few seconds. Listen to this. Hang on a second. Here we are. Listen to what Laura Kuenssberg asked Liz Truss, and Liz Truss's answer.
Can I ask the Prime Minister, did you discuss scrapping the top rate with your whole cabinet? No.
What? Okay, so that on its own, first of all, was a boom moment for me. She and Kwasi Kwarteng decided on the tax without consulting the cabinet. That is just, I find that staggering. But listen to what next.
No, we didn't. It was a decision that the Chancellor made.
She just threw him under the bus, right? She just threw Kwasi Kwarteng under the bus, which means one of two things. Either she's lining up to fire him because she's clearly blaming him there. That's clearly her going, no, don't blame me, blame him. Either it means that she's about to fire him, or it means that she's afraid that she's about to face the leadership challenge. But that was a very defensive maneuver when she's supposed to be like that with her Chancellor, and she's just thrown him under the bus of blame. So that was like, that made me go, oh, hang on, she's worried, right? But that wasn't enough to make me want to do this live stream, okay? The next thing that happened was this. I was driving, coming back from Wales. It was a 5-hour drive this afternoon, and I heard this. So this is The World This Weekend on Radio 4, and the interviewer, James Naughtie, was interviewing Rory Stewart, who is a former Tory MP. He's no longer a Tory MP, he's a former Tory MP. And they were talking about whether or not there's going to be a leadership challenge. And let me play you this clip. It's about 40 seconds long. Listen to this clip.
Given that Liz Truss wasn't the first choice of her MPs as Prime Minister, and a shoal of scary opinion polls for their prospects at the next election, what do they do now? Because it's on this that the future of her government surely depends.
Many of them are going to be very tempted now to simply try to get rid of Liz Truss entirely. I think it's extraordinary how quickly Conservative MPs, who are usually very loyal, at least in the first few weeks for premiership, are now all over Twitter tearing her economic policy to pieces. I've never seen anything like it. Many of them will begin to think that their only hope of restoring any kind of credibility to the party, saving the British economy, and potentially saving their seats is to get rid of her entirely and bring somebody else in who's a more mature, sensible, reassuring figure.
Do you think that will work?
I think they can, of course, do that. I think it's going to feel completely insane, and it will be deeply damaging in another way to the party that as soon as you've done a leadership election and elected someone in, to topple them again, I mean, it will make the Conservative Party seem febrile and completely lacking confidence, and it will.
So at that point, it sounds like, yeah, well, they want to get rid of it, but they can't because they look too bad. But listen to what he says next.
Damage the credibility of the party again. But that has to be weighed against the fact that if we don't begin to get inflation under control, interest rates under control, our currency under control, our gilts under control, we're going to be in much, much deeper problems. So I think
Okay, so he said that yes, changing the leader of the Tory party now would be terrible and make them look terrible. But if they don't get the financial turmoil under control, it's going to be even worse. And my reading of this is that behind the scenes, very, very secretly behind the scenes, there is abject panic in the Tory party about what to do. And I agree with him, which is that as disruptive as it would be politically to have a leadership change now, in the medium term, that will be less disruptive than her sticking to her guns, which she's done again today. Said, no, we're sticking to this policy and destroying the finances and the financial markets and the economy. So that was the second of three things that I heard. Okay, and that made me think, oh God, there really is a real chance. And she's worried. He's confirmed that actually it makes more sense. And remember, this guy's no longer an MP, but he was a Tory MP. So this is a really impartial view. And then the third thing I heard, I was listening to the Bloomberg podcast on, and this was the thing that made me really go, oh my God, this was the third. Put these three things together, and it leads to why I'm this worried. So listen to this. This is an American financial journalist, and they use some very intense bank babble, okay? But listen to what he's saying. He's interviewing, the Chief Secretary of the Treasury, I think. It's Andrew Griffiths, okay? So he's a guy in the Treasury. Listen to this.
The lowest debt to GDP in the G7. The economy is still growing, albeit we acknowledge that there's challenging headwinds.
Andrew, Tom Keene in New York. I'm sorry to bother you. As we speak, the Bloomberg Financial Conditions Index for the United Kingdom is a -4 standard deviations. You have seen a 7 standard deviation move in the blended gilt price move. You have a derivative disaster. You are the city minister. What are the regulators going to do finally to amend the derivative shell game that caused the Bank of England to bail out the marketing industry of LDI?
Yeah, and you'll be aware, Tom, about the independence of the regulator. So one of the things that you learn as city minister is
dodges the question.
the regulators have their job to do. What my job
How
is
did
to
they fail?
make sure that we have the most competitive environment in which to do business.
Okay, you have a competitive environment that on a 7 standard deviation move blew up. Fine. What does the United Kingdom do off of the scandals of 2007 and 2008 to finally control the natural greed of the derivative business? You're at the heart of this as city minister. How do we finally get our every 8-year derivative blow up fixed?
So he goes on to basically directly accuse this guy of being responsible for allowing the UK government policy to blow up the derivatives market. Now, this is when I heard that and I put these three things together, I thought, right, so there's a very high chance we're looking at major political upheaval, which will put the markets into a flat spin on its own. And at the same time, we are looking at the gilt market that last week was propped up by the Bank of England to the tune of 65 billion, which was a very sudden U-turn on their policy, which they're saying they're only going to do till October the 14th, which is less than 2 weeks away. And you've got Bloomberg journalists, broadcasters being very aggressive in their questioning of this guy in the Treasury, going, what are you going to do to stop this blowing up? And he goes on to say, because come Monday, if you haven't got something, it looks back, and he didn't say it, but he made it sound like on Monday, this is all going to blow up if you don't do something very fast. Now, I've put links to all three of those things so you can go and listen to the whole thing yourself in the description underneath the YouTube description of this. So I'm sitting in the car, driving down the M5, mulling this stuff over and weighing up with the probabilities of where are we? What's about to happen? And then a friend of mine sent me another video, which I haven't got a link to, which was a collection of a whole bunch of people, economists' reactions to the last week. And people saying, in my whole career, I've never seen such raging incompetence by government. These are not political people. These are just economists and professors and that kind of stuff. And then I saw a mortgage broker saying that on a Sunday, he didn't say which one, there was a mortgage product pulled the product was pulled on a Sunday, and rates were changed, and the mortgage market is busy on a Sunday, which they never normally are, preparing for this week. And I'm not saying that this is going to happen tomorrow or in the next 7 days, but I'm saying that it feels to me like there's a very high chance of a very okay. So I mean, I've always thought that, and I've said it a few times, whatever happens now, however this ends, it ends with a bang. And I don't know what shape or form that bang takes, but that bang could be tomorrow morning, Monday. It could be on Wednesday. It might be that. It might not happen. They might do something to pull it out of the bag and stabilize it, but I don't think they're going to. And that's why I'm saying everybody that's about to exchange on buying a property with a large mortgage should not do so, because here's what happens. And just think about what I'm about to say, right? If you end up in negative equity, having saved up a deposit to buy a home, you could find yourself in a position where your home has been repossessed and you have got a massive debt around your neck through absolutely no fault of your own, right? Please think about that. Right now, if you're a first-time buyer with a deposit and a mortgage offer, that how many years has it taken you to save up that deposit, right? And now imagine being in a position where that home you saved up for and bought is gone because circumstances meant you couldn't pay the mortgage. And not only that, you now owe the bank the difference in what, once they've sold the property, between what they sold it for and the mortgage amount that's outstanding. So there you are, out on your arse in the street, owing the bank money, and you've done nothing wrong. You've worked hard, you've saved a deposit, you've bought your property. And I know that there are some of you watching who have already just bought a property and are thinking, oh fuck. And yeah, and that's a reasonable thing to think, okay? And that's why I think if I, as someone who had just bought a property, because I love it and I want to stay there and everything else, there is that Bloomberg interview goes on to do an interview with someone from Deutsche Bank and someone from Rabobank, and they're expecting the dollar to come back down from 110, where it is today, down to 104. They're expecting that this week, which puts inflationary pressure back up. That makes things worse. The Deutsche Bank economist has said that he's expecting a deep and long recession, which means people will lose their jobs. And if you lose your job when you've got a mortgage and you can't pay your mortgage and you just bought the property with a large, that's when you end up losing your home. All right. So add these things all up together. And I'm saying that if I was a first-time buyer about to exchange, I would be tomorrow telling the agent, and I know that there are agents and sellers hearing me saying this going, Charlie, this is a nightmare for us. And I'm going to come on to, I thought very carefully about what's the impact of what I'm saying on sellers, what's the impact of what I'm saying on agents, okay? Because I care about all these groups of people, all home movers and agents. If you are a seller right now in a deal where you're about to sell to a first-time buyer with a mortgage and that first-time buyer suspends or pulls out, I understand that may be bad for you, but if you bought this property a few years ago, your risk of exposure to negative equity is far lower. And it's not ideal. It's bad. I get that, right? You don't want your sale to fall through, okay? Especially if house prices are literally about to fall off a cliff. That's not what you want. But your exposure and risk, in my opinion, is lower than a first-time buyer about to buy at the top of the market. And if you're an estate agent, obviously you're not going to be asking your buyers to pull out, but you may well be seeing, as a result of what I've said, some of the people watching this live stream might end up suspending and pausing their exchange tomorrow, and that may impact your pipeline. But if you're an agent, your entire future is not dependent on one deal or two deals, okay? You will, if you're a good agent, you'll recover from that, and your risk is not as great as a first-time buyer that might end up with massive debt around their neck through no fault of their own if they buy at the very top of the market, as I think it is right now, okay? So that's my position. I'm going to okay, so let's just expand on this a little bit. If you're a first-time buyer and you buy now and you're under negative equity but you can afford your mortgage, then okay, your worst case scenario is you want to move and you can't, and that's Not ideal. That limits your life plans. If you end up in a small home and then you have a family, it's too small and you can't sell. This is not ideal. Far from ideal. But at least you've still got your home if you can afford it, right? But a lot of people have just bought with 2-year fixed rates. 100,000 people are coming to the end of their fixed rate right now. 100,000 buyers per month are coming to the end of a fixed rate deal. Over 2 million buyers are coming to the end of their fixed rate deal in the next 15 months, between now and the end of 2023, right? Please think what that means for the direction of pressure on house prices in the coming year. Okay, so this is why I'm putting out this warning now. And if you know anybody who's about to buy somewhere, please pass this video on to them, all right? Because if they listen to my video and they choose to disregard it and go, oh, he's talking rubbish, and go ahead, that's okay. At least they've had the opportunity to consider this and then decide to proceed if they want to proceed. And of course, if your risk appetite is high enough and think, you know what, if we lose the house, we lose the house, fine, I don't care. Then go ahead, that's great, as long as you've considered it. But if this video saves even one person from that nightmare, then I'll be glad I did it. And if I'm wrong, there's no harm done, right? Because if nothing crashes in the next week and everything stabilizes and you've just delayed your exchange for a few days, you can probably proceed. Maybe there'll be a renegotiation and you still proceed. Okay, but I am saying my fear is that the coming week, last week was dramatic. I think the next week or the next 2 weeks could make last week look like a picnic. Okay, guys. Do any of you have any questions? Let me put the chat back on the screen. Okay. There's only going to be new comments. Let me have a look at some of the ones that are there. Any questions? Yeah. I'd like to call someone. I'd like to say something else, right? If you are, okay. I've got to think about who I'm talking to here, because I have seen a lot of trusted industry commentators who are people in the property industry continuing as recently as today to say that things are still okay, right? Just as I got home, I saw on Instagram Phil Spencer, who's a man I respect and like, who is a very highly trusted guy. And Phil Spencer has done some kind of partnership deal arrangement with Property Mark. And Property Mark is an association of estate agents. And it would appear that Property Mark is sponsoring Phil Spencer. Now, I don't know, and it's unclear, but I think he needs to make it very clear whether or not what he's saying is as a result of being sponsored by Property Mark or not. Because if it is, right, if he is being paid by Property Mark, the report he refers to in his Instagram post, which takes you to his website, and you click on the website, it says, I can't remember, it says the market is still very well underpinned. And I'm sorry, but I object to this, because if someone reads that and then proceeds because they trusted Phil Spencer's advice on house prices, and he's not a house price expert, he's a property expert, right? I would say to Phil Spencer, anyone who's messaging him, say, Phil, could you please clarify whether or not this messaging is sponsored by Property Mark? Is it what you think, or is it what they're asking you to say? Because, of course, Property Mark's members are all agents. Thousands of agents pay Property Mark a subscription. Property Mark is a great training outfit, by the way, right? Yeah, Property Mark is an estate agency training organization, and is a pretty good outfit. But if they're putting out opinions that are basically in favor of their members at the expense of mover life chances, then I'm sorry, you have to take it into account. It's their report, which was dated the 27th of September, made no reference to the turmoil in the mortgage market. Now, how can they possibly expect movers to trust that advice? It's so clearly vested interest advice. Anyway, so I've seen a lot of people in the industry still saying, well, yeah, we can see that there's some turmoil and there's a bit of a blip and there'll be a bit of a correction, but I don't think it's going to be a crash. So I am calling out those people because I think you're doing people a disservice if you're wrong, a very dangerous disservice. So I like Phil Spencer. I respect him. He's a very successful guy and he's trusted on property, doing property up, that kind of stuff. But he's not a property market, in my opinion. I'd be very happy to have this debate with him, okay? But I just think if he is... Of course I accept... TF Dewey, I know that other people have a less negative opinion than me, and that's absolutely fine. And I'm not even saying that I'm right. What I'm exploring is the consequences of trusting or not trusting other people's opinions. I hope my opinion is wrong, because if I'm right, it's going to be very bad for a lot of people, okay? But I would rather be cautious and be wrong than be, everything's going to be fine and be wrong, because that's how people get hurt, right? That's how people's life chances get hurt. So I, of course, accept other people have a less negative opinion than mine. And what I'm saying is, I think there is a chance of this turning very bad in the coming week. And TF Dewey, those other people's opinions, when you look and you dig deep in where those opinions come from, they aren't researched like mine are. I am not just throwing out an opinion out there. I have been digging deep and listening and considering and analysing. And all of the people who have a less negative opinion than I do aren't backing it up properly. They're just not backing it up. And I repeat my request to anyone who thinks everything's going to be okay to explain their reasons why, and not just quote vested interest. Like some other YouTuber was quoting the Zoopla report saying it's all going to be fine. It's all going to be fine because this, that, and the other. And they made no reference to what's happening in the mortgage market now. Just like, sorry, there's no credible alternative. Like the less negative viewpoints than mine aren't backed up with any credible data that I can see. Alex Groundwater, who, disclosure, is a lifelong friend of mine, we were at school together when we were kids. Given interest rate rises that are coming, how do you think it'll impact company debt? Yeah, okay, I don't know. Alex, you're talking about the zombie companies, and I want to get onto that in another video, but I don't yet know. I haven't got enough information on that. Sonia Adnan, I'm a first-time buyer, and I have submitted my application on the 19th of September. And if this will be approved in the next few days, my rate was locked in 3.39 for 5 years. I'm buying the property which I'm renting. Okay, what's your question? Should you go ahead and buy it? That's fine. Like, proceed. Just don't exchange until the turmoil in the markets is settled. And what I think that means is, what is the political fallout from this going to be? And how are the markets going to react to that fallout? Okay. Now, if it goes as badly as I fear that it could, we might. I don't even know. I don't even know what that looks like. I don't even know what that looks like. Yeah. All right, that's half an hour I've been rabbiting on. Guys, let me just do a few more questions and then I'm going to call it a day there. But please pass this on to anyone you know that might be buying. What will be, so Camden, what will be the solution to what? I'm saying I don't know how things play out the next few weeks. And because I don't know how they play out, but I suspect major political turmoil and very high risk of the gilt. Guys, if the bond market collapses and pension funds become insolvent, I don't know that that's ever happened before. Maybe it has. Tell me if I'm wrong, right? I don't know what that looks like. And it's, yeah, as far as how far down you push your offers, again, I don't know. It depends. I was saying 15, 20%, depending on the asking price. I don't know. I don't know, guys. I don't know. We are in totally uncharted territory now. Totally uncharted territory. And if you've been watching me for a while, the last few weeks you'll see that actually it has played out as I suggested, but it's actually played out even worse. It's happened faster than I thought, and it's happened worse than I thought. And I wouldn't be sitting here in front of, I've got 1,000 people right now on this live stream. I would not be trashing my own reputation and credibility saying this if I didn't have a particularly strong feeling about it. My best agent sign should be the right way around now. I thought I'd reverse the camera. Is it not the right way around? That's the right way around now. The worse things get, the more you'd imagine them. Yeah. Yeah, I'm talking about, all I'm saying is don't exchange yet. Greg, very funny. Is this a good time to buy, Charlie? Okay, now the mini budget. Okay, so some people have said, is this happening because of the mini budget or was it happening already? This is my response to that question. So if the mini budget hadn't happened and been the total clusterfuck that it is, then house prices, and in fact, Nationwide put out a house price report on Friday, and it confirms that the UK national average house price reduced from August to September, reduced by about £1,500, and therefore that was the first official confirmation that I'd seen of prices falling. Okay, so they were, and that was in September. This is before the mini budget. So house prices, in my opinion, began falling a few months ago. You just won't see the official confirmation of that for a while. So house prices were already falling, and there's lots of evidence of that in my mind. Christopher Watkin, a friend of mine in the property market, who's been an agent, and he now advises agents, put data out showing that in the third week of September, agreed transactions suddenly dropped by about 20%. Really, at what's a very busy time of year, right? That was before the budget. The transaction levels have been pretty stable for about 8, 10, 12 weeks, and then suddenly, they dropped in the third week of September. So it was already happening. And what the mini budget has done, if housing prices were coming down under a parachute, coming down quite fast, but in a sort of controlled manner, what the mini budget did is it chopped the parachute off. And now the housing market is in free fall. Okay? Or another way of looking at it, if the housing market balloon or bubble, whatever you want to call it, it was doing one of those farty noise balloon coming down. It wasn't like exploding. It was just going over a few months period, right? What the mini budget did was it took a pin out and it went bang on that balloon. That's what it's done. And if my worst fears are realized next week and pension funds collapse, I haven't even begun to imagine what that means for people's pensions. I don't even know what that means for people's pensions. I think that this collapse will become known as the pension fund crisis. Might be, maybe not. Yes, this video is available immediately on YouTube now. Anyone that gets the link right now can watch it live, or you can go back to the beginning. Yeah, anyone, if you can make overpayments, as long as you can completely clear your mortgage, that's okay. But I'd be careful about making overpayments on your mortgage if you're going to run out of savings and then end up in negative equity and then lose everything. Yeah, definitely. If you're thinking about buying now but haven't actually started the process, I would sit back, get some popcorn, and be very glad you haven't just bought. David, sorry, what do I think of what? What happens when you're about to remortgage and you're in negative equity? That's a very good question. I don't know. I mean, that's a very good question. I don't actually know the answer to that. Are there any mortgage brokers watching that could answer that question? If you want to do a remortgage, but when they come to reconsider the value of your house, they realize you're in negative equity, are they actually going to give you another mortgage? I mean, I suppose what will happen is you just go to the standard variable rate if you can't remortgage. And as long as you pay the standard variable rate, you'll be okay. Alex, I hope you're right. Pension funds will not collapse. I really hope you're right. So yeah, guys, there's 3 versions of negative equity. There's surviving negative equity because you keep on paying a mortgage throughout it. There is not surviving negative equity because you can't pay your mortgage, and so maybe you move out and rent it out. You keep it, but you can't live in it. You have to rent it out, and that way you keep it. Or you're in negative equity, you can't afford your mortgage, bank repossesses your home, and they sell it for less than your mortgage, and you are on the hook for the difference. And that is the scenario that I'm trying to get people to avoid. Okay. High loan to value is 75% or above. How are things compared now? Okay, some people are already starting to make comparisons between now and 2008. And I saw a mortgage broker's comment. It was in actually one of my YouTube videos. Robert Gill, I think his name was. And he said what happened in the last week was of a magnitude that it took a whole year to happen in 2008. I think that's right. Robert Gill, if you're watching, would you just confirm if it is you and if that's what you said? I think this is going to make 2008 look like a picnic as well. 2008 on steroids, yes. What questions? Sorry, so many of the questions. Do I think interest will have to increase to more than 6%? Okay, so let's have a quick moment on interest rates. Okay, there's Bank of England base rate, and there are mortgage rates. Now, what's happening if the pound weakens against the dollar? That's inflationary, and if the bank has got the bank has got to put, at the moment, the markets are pricing in a 1.35% base rate increase that would put us up to 3.6% in the next few weeks as a base rate that would put mortgages up a couple of percent above that. Their forecast to get up to the worst case scenario forecast I've seen at the moment is that the base rate reaches 6% at some point next year. So the reason that the markets are in turmoil, especially the mortgage markets, is that interest rate rises have now become incredibly unpredictable. Yes, Alex, this is much worse than 2008 for individuals, not for banks. Thank you. Very good to point that out. I don't know what Scotland's going to do about stamp duty or their equivalent. Why are properties listed on Rightmove in the last 2 weeks still going fast? They're not. They're absolutely not. They are not going fast. I mean, there are places where properties coming into Rightmove and the asking prices have gone up. There are a lot. Okay, so every time I get the question, why are there more properties coming on and asking prices are going up? There are a lot of sellers out there who've been sitting on the sidelines waiting to sell and cash in on the profit last 2, 3, 4, 5 years, who are unaware of the fact that they're too late. They're too late. And they're coming to market and they're putting it on at a really high price and they're not going to sell. It's as simple as that. Okay. The only sellers who are going to sell now are the people who've got really beautiful, rare properties that are hard to find. Those will always sell. Okay. But people selling ordinary, run-of-the-mill properties now, who come on with an optimistic price, or the agent says that it's worth more than it is, you're going to be in big trouble. You won't be able to sell. If an offer has been accepted, can you ask for a lower price given recent events? Says Rain. Yes, you can. You can renegotiate, and there's a video. Go and look at my YouTube channel. You'll see a video called "How to Renegotiate Your Purchase." I think it is. If you're a cash buyer, don't worry. I mean, yeah, if you're a cash buyer, you'll the value of your assets going to come down, but you won't be in negative equity. Do I think the governments will intervene and support the public? Well, okay, I think it's important to explain this. The reason we're in this turmoil right now is because the governments, in their mini budget, were trying to intervene to support the public by cutting taxes. But the money markets have gone, hang on a second, you haven't costed that, and you haven't got a budget forecast, so we don't think you can afford it. So the government might say they're going to intervene, but intervening means borrowing money, and the people that borrow the money are going, no, not at those interest rates, it's going to be higher. And that creates massive financial instability for the government. Yeah, so, Sarah Rimmer says, I live in a pricey part of London. Lots of properties have been on for months with asking prices dropping. Unheard of in this area in the last 10 years. Exactly. Yes, as a first-time buyer in London, I should sit down and watch how it plays out. Absolutely. London is falling faster than anywhere else at the moment, is my most recent information. 50 new messages on there. Hang on, guys, give me a chance. Any questions here? It's really hard to see the questions on TikTok without sort of scrolling. It's much easier to see them on YouTube. No, the trouble is the printing money. I mean, basically the printing presses are all out. They can keep going, but the banks won't need bailing out. This is not a banking crisis, guys. This is not a banking crisis. The banks are not going to need to be bailed out this time. It's a different sort of crisis. Guys, I can't give you investment. I don't give investment advice. My mission is to help movers get into a home and to help movers not lose their home. Okay. Some of you keep asking, if I sell up and cash out, where should I put my cash? There are plenty of other people who can give you better advice than I can on that. London is going under. I had a house offer for 650. They have reduced it to 550. Right. That's £100,000 drop in an asking price of 650. So that's 15% drop. No, the risk of negative equity is lower for smaller mortgages. You had a 100k mortgage offer on so 85% loan to value. That's still a high loan to value. So that's still very high risk. I mean, guys, you've got to be thinking 35% drop, right? So if your loan to value is higher than 65%, you are at risk of negative equity. Will the Northeast also face a hard crash like the South? I don't know how the crash will be in relation to it, but yes, I don't think any of us are going to escape from this. Yeah, I'm getting so many people telling me that stuff they're watching on Rightmove has been there for ages. Prices are dropping, asking prices are dropping. And guys, just so you know, I do have access to all of this house price data in Best Agent. We've got access to all of the asking prices. The problem is that my Best Agent data set is still not yet clean and reliable enough, but I can see, I've got a really good feel for what's happening. And the reason back in February, I put out a video on my Moving Home with Charlie channel saying, I think prices are going to fall this year, because it was in February that I saw two things happening. I saw an increase in the number of properties coming into the market, and they were staying around longer in really popular areas. And that started happening in February. Yes, I am expecting government musical chairs in the coming weeks. I'm expecting one of the most explosive political showdowns we've ever seen. I'm expecting in the coming weeks. Skipton and NatWest Guernsey have pulled all products for new customers. Barclays Guernsey rate is 6.34%. Thank you, David. I don't have any thoughts on the Edinburgh market, sadly. Yes, you have to be mad to buy when we're clearly at the top and the slope is just inches away. I think, unless you can negotiate well down. Don't forget, guys, some of the sellers are highly motivated sellers. For example, probate sales. They just have to sell. Okay, so those sellers, if they want to sell now and they're being realistic about what's happening in the markets, they're going to take a big hit. They just want it sold. They want the money. If they've got no mortgage on it, they just need to liquidate that asset. They're going to sell. So there will be people selling. Yes, you're best to wait and keep topping up. Poink Loimanoid. I don't know how to say your name. Poink Loimanoid. Yes, definitely wait and top up your deposit. Keep saving. Yes, is my view. Thank you very much. So yeah, do I think rents will drop or increase due to high mortgages? I think at some point, but I don't have an idea on how long this is going to take. A lot of people in negative equity who can't pay their mortgage, to avoid losing their home, will move out and rent their home out, even if it's if that's in contravention of their mortgage terms. Mark Graham, who is an agent in New Zealand, says, hi, Charlotte. I know this is just for buyers in the UK, but what you are talking about right now is happening here in New Zealand. Properties in the market taking longer than normal, prices dropping. Thank you, Mark. The music has stopped. Adamus0007 says, I agree. Let's take a couple more off TikTok. Yeah, if you haven't started the buying process, guys, I wouldn't be starting it right now. I mean, there's no harm. Go and look. There's no harm, right? You are not at risk by going out and looking. And if you want to get a good value property, you need to be out there looking anyway. So, if you're a first-time buyer and you want a home, don't just stop looking altogether. When you see stuff, get out there and look at it. Just don't exchange yet. And remember, if you haven't got a mortgage in principle or anything like that, you're going to be a long, long way away from actually being able to offer. It's easy to say pink lemonade, but yeah, I think rents. I mean, rent prices are okay for now. Beefy Beef says, I see mass repossessions on the horizon. Yep, sadly, there are going to be repossessions. Even Savills, who are on Radio 4's lunchtime program, World at One, earlier in the week, the head of research at Savills, or one of them, said there's going to be a big rise in repossessions. Sorry, the questions are scrolling so fast. It's going to be a bigger than 20% drop this time. It's going to be a bigger than 20% drop. Guys, I'm going to wrap up with this one comment here, right? There is a lot more to this that people need to know. Some of you will be aware of this already, some of you won't. But this may be the beginning of such a dramatic change in our economy and in our finances. And it's really grim when you go and look at the predictions of what's going to happen. But I don't think any of you, this is what I'll wrap up with, I don't think anybody should be thinking that after this correction, we're going back to normal. Okay? We are, whatever the new normal is going to be nothing like we've been used to for the last 10 years. Nothing. It's going to be a different world, not in a good way. No, if you need a home and you can afford to buy it, go ahead. If you just need a home and you got cash, go buy it. This is very much aimed at first-time buyers with high loan-to-value mortgages. Chaps and chapesses and chaps of any other gender, I'm going to call it a night there and say thank you very much. I've got a sore throat and I've got a banging hangover and I want to get an early-ish night because this is going to be another roller coaster week. And if you see me smiling, right, this is gallows humor, right? I don't think any of this is funny. I just think that, from a work point of view, this is going to be an absolutely nuts week ahead. So I wish you all a very good night's sleep. Please share this video with anyone that you know that is thinking of buying or is close to exchanging and tell them to pause their exchange and sleep tight. Thank you all I'm getting so many supportive comments, right? I really am. I mean, like 95% of the comments and messages I'm getting are really supportive. So I really appreciate that. And some of you have actually, I didn't get the names. Some of you were good enough to go to monzo.me/Charles Lambden and send me a tip. And that was massively appreciated because I am self-funded. I am a bootstrapper, guys. I do not have investors or any support of any kind. So all support is greatly received. I'll put a link to that in the description afterwards as well when I finish the video. Guys, I'm sorry, there's over 100 new messages on TikTok. I can't keep up. I've got to go. I've got to go and spend some time with my partner, Anne-Marie, because I haven't seen her all weekend because she couldn't come to the wedding. Lots of love to all of you, and thank you, and speak soon. And I hope you have a good week. Bye, guys. Good night. Thanks, guys. Daniel, thank you. Yeah, if you're cash buyers, guys, hold on. Hold horses. Going to be looking much better. Yeah, there is a perfect storm of different factors coalescing. I agree. And Alex, we need to talk about the zombie companies. I've been meaning to ask about for a long time. I've got to need to get your data on that. Yeah, you guys take care too.